Welcome, another week. First week of March, isn't it? I think it is. Another more of the same. Oil up, stock market down. It's playing out very nicely to as far as our strategy goes, so that's pleasing. So welcome to another Traders Community podcast. We have the glorious Madavi with us. Volatility Radar and Meta Johnny is. I know he's too meta now. He's been trading all these hardcore commodities. So someone should tell him that those are real. What do you think, Madavi?
Yeah.
So, as you know, those are following along with our strategy pretty well. We do it every week in our weekly rundown as far as technical. We're still in that bear wave off the top up there as far as the futures go, and as far as oil and in particular the bull swing there and many of the commodities. Natural gas, as far as the US goes, is still very much in that sideways move with little pops. Gold, as you know, broke up a few weeks ago. As far as currencies goes, the bend has been towards particularly the Aussie dollar. As far as internally, and then the safe haven such as Swiss franc, the US dollar against the weaker hands, etc. Bonds have been on a tear pretty much. Mixture of safe haven, the dollar, and uncertainty with rates. So let's have a quick look at where we are today. Pretty much it was today's visual pretty well sums it up. The oil bull pretty well crushing everything else there. So we thought that would be handy, and Johnny has that same hat from his days in Colorado and has that same Dickies t-shirt, I believe, Madavi, correct?
Yeah.
So let's look at where we are right now. Let's put up the right chart, would help. So right now we're sitting over $120 WTI. We traded over 126 last night. As far as the SPOOs go, the cash is trading down at 41.88. Significantly, that's at the low of the day. Everything closed at the lows as far as stock goes. The Russell 1947. Nasdaq 13,270. Vol closed on its highs 34,675. The VIX right now, and natural gas 480. It did go up as to test that 520 last night. So domestically, you would say it's more bearish. The weather, it's been kept up here by geopolitical issues, obviously going on in Europe with Russia and Ukraine and all that good stuff. If you have any questions, just jump in, put them in the ticker. We're going to go through, obviously, the market strategies, what we took off today. It was a good day to take a lot of profit off. Some of our positions there. We also, what was noticeable, a couple of people, other traders we watch, there's some real good energy low floaters pop up today. Some we were familiar with, so we took advantage of that. Some of our dribbler shorts really came to fruition. We took some off there and also added to some others. And there was a few other story stocks we can talk about. So let's get into it, shall we? Start off with the SPOOs. So pretty well, since last week, as far as the S&P goes, it's pretty well been a directional trade. So let's look at weekly, may be more a better look at it. So we've had, if you recall, since that 50 retest, we're pretty well just stayed short. And I've barely done many trades. He just stayed the same way. Just taken some off, kept the core kind of trade on that one. I've been a bit boring there, really. As far as the puts we had, I let them, and we had some Apple puts. They expired worthless on Friday. We didn't add to them. Would have been nice to, perhaps, but again, wasn't worth at these high vols. We already had the futures direction on, so we did not want to add to the equity drawdown there if we were wrong. And if they're too short, what you're finding is, unless it's straight away, you're going to lose on that vol, right? So lo and behold, Johnny Hindsight, of course, would have stayed short over the weekend as far as that goes. So we did did do some puts this morning, which worked out well as far as that goes. Apple we left alone actually. Oil, we'll talk about in a bit. So let's just stick with this right now. We have closed right in the middle of the cloud. Remember, this whole thing is either a 5 of a 1 or a 5, meaning this is either an A and this is a B to go substantially lower, or this is an A of a bigger BBC, ABC, sorry, not BBC, or this is a 1-2. There can only be three things as far as that goes. Daily will give a clearer stuff for those a little bit confused. You shouldn't be confused. This has been pretty well clockwork, and that's why we just plead with you almost, if you're a novice, to stay away from the dribblers. This has been a very, very clear and clinical market for pretty well since November last year, but very much so since the selling kicked in. And confirmed a lot of issues, and then the retest here, this 1-2, right? So I read all this stuff about the Fed this, the Fed that, the Fed should have done this. There's been a few little changes and miscalculations by governments and all that sort of thing. We have wars going on, all that mismanagement of energy policy and other policies created an unnatural squeeze. I mean, it's so a lot of that. What dribblers are very good at is just telling stories, but in the end, they catch up with them. Correct, Madavi? And what happens in this situation, a lot of it's kind of like conspiracy theories. They're around just to redirect the blame or the etc. So just keep that in mind. This has been very, very cut and dried, particularly as far as stock markets go. Anyway, so you can see there, very clinical. If you recall on the weekly, up here was also the 50, and you can see the kiss of death there that's come out very nicely. And really not much to show. It's just been a one-way downtrend, right? And look at that, this low, you can see it. Remember, we go down to time frames. Here, it did look like mathematically at minus 1/8 on a 240, there was something there, but it just keeps dribbling down, right? See that? Just no support. This is an hourly chart and not one green bar since this spit here. So this is 43.20. This is 41.88. So one green bar, right? And here's your 50. So combining this with simple understanding order flow, simple bond market reaction, currency, commodity, and the like, but sentiment more than anything. This is a pretty straightforward read. They're not always going to be this straightforward. Okay, so Madavi played more in NASDAQ, as he tends to do. And as I said, as far as the SPOOs goes, I've been pretty well concentrating 100% or 92% on the energy sector, the dribblers, and some bank plays we've both been doing. So without further ado, here's Madavi. Here's the daily off that double top up here. So if you want to talk us through that, mate.
Well, yeah. I mean, today was basically, since last night, today was a really weird day because there was no bounces. I mean, usually you get there was a one bounce in the morning. But besides that, it was, since last night, the same escalation of, I don't know, now it went from COVID to Ukraine now. So it's all about that. So if the guy gets bombed there, who knows what's real, what's not, how things work. So the news of it just beating up these drums, and the market just tanked today. And this is one of the first times I've seen the market keep selling and don't really, after the one bounce in the morning, don't get another bounce. So it's, you look at the chart, the NASDAQ was down the most today. So it was good. It was a good day in the NASDAQ. I screwed up in the SPOOs because I was trying to go long SPOOs and short the Nasdaq. So that it was not a good day to try that.
No. Well, so yeah, 100%. There was, I mean, I think the only bounces. There was a couple of times I think I've covered, right,
Yeah.
and then it didn't even. I'm trying to bring up on this other screen. It didn't even. I mean, literally did nothing. There was no bounce there whatsoever. That went one or two times. I think it would bounce 3-4 handles. I don't recall it even doing a double figure bounce. It may have, but I don't recall it.
The funny thing
A
is,
couple of times I
so
think
many times
I've covered.
holding in position, all of a sudden it bounced so hard. And today was the only day that I didn't do that, and I didn't hold it really big like I normally do, and then have to get dragged out and come back in. And it was, I was doing it the opposite way. It was like, because you're always worried about here it comes.
Right. Yeah, when we've seen these bull markets go on, really since 2008, you could argue, but not. There's been these manic drives, but certainly since the COVID thing. But yeah, that's got to have hurt. I mean, just look at some. So today, Apple was up for a while, but once that went, that was it. But looked at, I just didn't trade it.
The market just got splattered. I mean, it was gonna get splattered anyways. It's just giving it. The good thing is, the faster it goes down, the faster it'll come back.
In theory.
And then, no, because you get the pain out of the way, and then you can start your recovery.
Right. So it's going to be interesting. And so remember what we are is we're traders. We're not storytellers or we trade what's in front of us basically because it's constantly evolving. And I think surely you're getting the understanding there why when you just never know. Now we're living in a war area. And as Manavi said, you really don't know what's real or not. But what you do know, there's a war going on, there's people getting killed, there's all these other things. You know that's changing everything, right? Demand, what commodities are going to be used, how people's sentiment, people losing jobs, gaining jobs, all that filters through. Interest rates, there's so many things. So you just, like intraday, you've got to be hands on the wheel, concentrate on your trading, and just expect the unexpected, right? Like, and we'll talk about in a minute, but we certainly didn't expect to be trading small floaters. We did a few on Friday, but today we did a lot of them, right? They were really moving. Yeah. It's been a long time since we've done that.
I did one that made a couple cents. It was cool.
Yeah. So they were really good rewards, and quickly, if you recognize, okay, this is it, this is the theme. And so basically that happens because you got different players in the market. You got your short-term people that do not have overnight positions, people that are clinical, they're just looking for certain setups, and traders that are very aware. And that's what you want to be around. Now, some of these we were very familiar with, which is good. This is a sector we know well, so that helps. That's true.
And this market is weird because any kind of bad news could be good news because you don't know what their agenda is. You don't know what kind of agenda they're running and what they're going to make it sound good to. They're going to sell to people.
Right. So, well, I don't know who you mean by they, but it could be anywhere from the talking heads, hedge funds, or
whichever guys in governments or whatever.
Well, I think the government has totally lost control in the US. They don't know if they're Arthur or Martha right now. You know my view on all that. This whole mess with energy, and then it turned into a war.
Again, I always said when it comes to war, they all come together. Look at them today. They're all together voting, Republicans and Democrats.
Yeah, but we're talking about traders. So you telling me, hang on. You're telling me that these people know what they're doing.
Vote about like not bringing any oil, Russian oil.
But that's not the market, though.
Republicans and Democrats were both voting hand.
Well, that's a different thing. That's a different thing. That's responding to someone who's slaughtering people overseas, right?
Usually the Republicans can't get along on nothing.
Oh, yeah. No, I agree 100% there.
Oh, kumbaya. You know what I'm saying?
Kumbaya.
And
I think you're saying kumbaya.
that's how sick the government can get. You know, when it comes to war, they're all like symbolic. They give out a nice little speech, talk about the little girls and daddy dying, so they can go do it themselves.
Hang on. Let me look from a slide. That would be the one that comes under the industrial military complex, or is it the military industrial complex? I always get it mixed up.
I mean, the industry has the TV networks, has all the politicians, has everybody on it. I mean, they're in sequence. And if you say something they don't like, they just ban you off Facebook, and they'll shame you to death.
Right. Yeah, old Facebook. How's that doing? Where's Johnny when you need him? I haven't looked at them. I assume they're still getting dumped with the rest of tech, are they?
I mean,
But what I was getting to was away from politicians, because I don't believe they run it. They like to think they do. While we're on that, how's Nancy Pelosi's portfolio doing right
I say
now?
they ran it. I'm saying that they all come together like a harmony. You know, all the networks. They're like peace out here. Like, wow, are they going to like a peace party?
Well, don't forget.
But no, it's for war.
There's a lot of things. You got elections and all that, but as far as the market goes, anyway, let's get back on track. So the theme is what's relevant, and I thought, and that's kind of what I think we were getting at, that what's bullish and what's bearish. The trouble is when there's so many people just so wrong and don't want to change and looking for excuses. That's why we try to steer people away from the dribblers, and that's why we actually did the podcast, right, and pursued with it. And actually experiences with some of those dribblers have made us go a little bit more hardcore on what needs to be shared, I think. Would that be a fair comment? But one thing of note, so in a normal world, of days of yore, when the stock market's getting crushed, commodities that we use are going up. So we actually do need energy, we do need food, we do need to sleep, all that sort of stuff. It would be unheard of, I would have thought, for the small floaters to be going up the way they did with volume, right? So
there were oil and gas stocks. A lot of them had.
Oh no, 100%. But the fact they're doing it, and so there's two things there. One, the theme was recognition by enough people that these stocks, and look, a lot of them are just trash, right? But they're buying them not knowing what they are. So some of them will be good shorts, whatever, at time. But the point being to recognize that there's a big percentage of this market that makes a lot of money doing that. I know the perception is that anyone who doesn't spend 42 hours in investment books or all these long theories and strategies, even though they're part-timers, don't know what they're doing. And the other one is if they're not professional and been to an Ivy League at a bank. Well, there's a good slew that does know what they're doing, right? And that's clear. I mean, we've recognised some of them and we watch them and we look at what they're doing and we'll jump on them. Yeah, so
I don't think you traded some great traders made over the years, some big banks and everything, and the best traders are not them guys, you know. The best trader, you know, those bank guys.
Well, it depends what bank, right? If it's an investment bank, it's different to a corporate bank, right?
Yeah. Well, the corporate guys just go on a strict line. They can't get out of the thing if they wanted to.
Yeah, Daddy might have got the job.
Good traders who manage good funds and everything.
Yeah.
Are pretty savvy guys who are not just reading something out of a book.
Yeah. I've seen some great traders come out of places like Goldman and Morgan Stanley, mate. As I got to tell you. But you're not including them. You're talking about Bank of America, I think, people like that.
They've got athletic backgrounds. They got, you know, but or some kind of background.
Oh, we're talking our book now.
They can be able to adjust to current market. Doesn't have to be. It can be something that you could adjust to. That doesn't mean to be.
Oh yeah. I know exactly what you're talking about. You get a script basically of what you're going to do. You know, that's not what the good guys don't get that, and that's the point we try to get across. It's a constant moving beast. The market's a constant moving beast. You know.
That's why I developed the book. Dummies, stock trading for dummies.
Right.
Go over there, see if you should buy more, or you should sit, or you should short.
And that's the other thing. Strategies or investments can include short selling, because when you're short selling, you're the other side of it. It's easy to come to grips with that with currencies. If you're buying one, you're selling the other. But the same thing is reality in stocks, right? People get all upset with short sellers. No, they're recognizing it's overvalued. And if they're wrong, they'll pay the price. So everything can be different. And so at the end of the day too, there's just simple understanding of risk, of credit, and all that sort of stuff. And that's really going on. The bond market's been telling us that for a while, actually. And so has the currency market. So this is one of the easiest setups as far as direction. If you can... The hard thing is we're all human, right? We're all human, and that's why we're big on having a technical aspect, because it's not easy to ignore that sort of stuff, because we're all human. I think, I didn't even look at the Rusty today, really, to be honest. Did you?
It did the rest of it, tanked down. It got a little bounce at the end, I think.
Let's have a quick look just so we know. Not much of one. Yeah, so that's pretty well done the same thing, right? That's 5-minute chart.
It's got a lot of oil, gas, metals companies in the Russell too.
Yeah, there's some decent ones.
That's why it's a little bit more stronger in days, because the gold's up, everything's up. I mean, gold could break all-time highs, I think.
Gold. So gold's a great. Gold's one of those great technical traders, and oil's another one, but oil's got a bit silly now. But gold is a great technical trader, because if any of you studied Elliott Wave or anyone that can read crowds, that's just such a great emotional one. So let's look at gold. That's wheat. We played in that today.
Highly manipulated, over the. How
the paper aspect's manipulated.
What's that?
The paper part's manipulated, like the rolls on the futures, but
so they got all these instruments that really keeps the gold from breaking out. I mean, look, in 1990, the price of gold was almost $1,000. 1980. I'm sorry, 1980. Now, fast forward, almost what was it, like 42 years or something? 42 years later. And it's at 2,000. Only 100% up.
It's not at 2,000 yet. You got $1 to go. You got $1 to go, mate. I'm only playing with you.
For a while. I think you did.
Yeah. I'm just playing.
But
it's been a long day, long night.
In that distance of time, gold probably not performed well if you bought it in 1980, because you paid.
Right. Well, that's why I haven't traded gold until this for a long time, because it gave me a perfect break, right? And then the sentiment was also perfect too. This is a month ago. A month ago, you knew what was happening. You knew inflation. Look, everyone wants to pin it on Powell because they don't want to take their own bloody excuse, right? Including the government and everyone. The bottom line is he said, look, this is supply. I can't fix that. How can I, right? Bottom line, he's basically saying there's inflation, I can't stop it, right? We know that. Yeah. We also know there's unrest in the world, right? And all this sort of thing, and Bitcoin was finally breaking down, right? It was 6. So everyone's forgetting this, all the Bitcoin enthusiasts. Bitcoin was, 67,000 or something? And so at that point, point, gold's the old thing, and it's not going to work, and all that sort of thing, right? Well, looky. This is what happened. Remember all this congestion. So that's from went over this last week, but that's like 2 years' work, basically, almost.
Yeah. So
that's what's going on here.
By the way, and now we're hitting all-time highs again.
We're not all-time highs yet, but we're close. $80, I think.
We're close. We're close. But I'm saying last time we hit all-time highs, and when it got up to almost 1,000 in 1980, remember what was going on? It was huge inflation. I mean, The banks were giving out 18% interest. I remember here, 18%. Could you imagine going to a bank today getting 18%? Nobody would work.
Well, they don't work anyway, mate. Half the country doesn't.
To get a mortgage for your house back then when you bought a house, you'd buy the guy's house with his mortgage, and you take it over, and whoever had the best mortgage, if had better payments, this house would be worth more. So that was what it was like back then. Nobody went and got a 25% mortgage to buy a house.
Yeah. I would say, you remember all that? I forgot how old you were. Jesus.
That was the first. How can I forget?
True. So,
it's kind of a distinct year, mate.
That's true. I did forget about that minor detail. So let's have a look at where's our chart with the bloody volatility? Here it is. So we got old VR. Should we go with VR? VR here. So he, as you know, is quite the guru when it comes to vol or VIX, whatever you want to call it. So this was quite a big day for volatility. This is today's 5-minute chart. Look at that turnaround from this morning. What are your thoughts on this going forward?
Well, everything's bullish in the volatility area. I do see a interesting hanging man candle on the daily of the VIX. I don't really read into any sort of technical analysis on the VIX too much, but I thought that was interesting. It's a bearish reversal candle.
Which one's that one?
Again,
so daily only goes back here to, it looks like just this year. I don't think I can get. Yeah, I don't think I can get VIX. Yeah, when we go to the other charts, it'll pop up there because this is at Volex. But yeah, look at this. Wow, we basically got over this high, didn't we? It's just
there's still not a lot of hedging going on in
no. It's just ratcheting up, which I find amazing. Really, we've got gold up, as Mondavi said, inflation, war, all that. Stocks so I think what's got people, this is ratcheting. So there's a complacency there, and the stock market. So here's stocks, right? The bond first, then we'll go back to stocks. So this is the 240 on the 10-year. Look what's just happened. Yields have just been sliding. We actually closed or tested underneath here again. So you've got all these factors, yet VIX is telling us they're not really scared. It's elevated, but it's stayed elevated rather than having a panic burst on it, right? Which is, it's I don't know. It's hard. I don't know what to think sometimes when I look at the news and listen to some of these comments. That's why I just can't spend too much time, if you notice, on the Twitter and that. I just think, oh my God,
bonds are a chop fest lately.
Yeah. So this is a 10-year, which is the benchmark. So just look this is February to now. Look at the volatility in a 10-year bond. These are big points, remember. That's pretty choppy. And remember when we went over 2, it was the end of the world, and that, interest rates are going to 3 or 4%, bang. Mm-hmm. And all this stuff with Russia, that just didn't happen. It's been going on. The war drums have been beating for Biden for that for quite a while, right? 6, 7, at least, start of the year. So, and those that actually from the region know what Putin's been doing for a long time. So, and I bet you bottom dollar, the good bond traders and the good currency traders are very observant of risk. You actually got to learn to trade those things at a shop or something like that properly, rather than buying, what did Madavi call them? Trading for dummy books. But, yeah.
The handbook for trading for dummies,
Right.
These are for blackjack. You remember it? They used to give them one, blackjack for dummies. Hey, should we hit? Look it up in the book. And he's had his little book.
Hey. What are you talking about? That's a good book. And the casino boss would sign it and wink at you. You're okay.
I don't know. The dealer's showing 20. I don't think so, honey. But no, it says.
Well, you know what? the understanding that and the martingale principle and stuff is important for trading, I think. Goes with psychology, yeah, you know. And I would suggest we should do that one day, the good trading movies. But some of them are just simple things like the poker movies. Like, trying to think of the bloody name of it right now.
It's got to be trading places, right? Eddie Murphy.
No, well, they're great trading movies, but the great gambling movies, a poker one. Oh, what's it called? With Matt Damon. Yeah, Rounders. There you go.
One of the best traders, you know, my buddy I used to have the office with, and they were all Metsas, and they used to go in Las Vegas, and they used to take out Las Vegas. They all ended up in their little black book.
Yeah, I know exactly. Yeah. So good. So maths is you got to know your maths, and you got to know your psychology. You got to be able to control your own weaknesses, and that's what makes a great trader, right? So it's a fine line. So it's all about controlling and understanding your probability. So let's get on to the main thing: oil. And what a beautiful thing that stuff is.
The world.
So apparently we didn't need oil. We could get rid of it all. We could go on like that. But we won't. I think we know what's going on. So on the weekly this week, as I said, on Friday, I was going to work in some extended scenarios. Lo and behold, it actually happened. So hopefully you guys are enjoying that stuff. There's some good stuff in there. The move that we have had. So one thing when you use different Fibonacci's is you want to find. So what you're really measuring is the mass psychology, right? So a good skill is to recognize when an impulse wave is versus a corrective wave. So what's very clear to me is we had this correction back here to $60, right? And then from that point on, we broke this high at 84. If you see, it was like a double top. We did all this work. So from that point on, we had a change in volumes. As far as Elliott, we've marked it as different waves. Remember, that's what it's recognizing. We had a different environment. And if what happened was, from a money flow or open interest point of view, a lot of length came off with this move. So this was also where President Biden donated a lot of U.S. oil to oil companies with his SPR, but apparently that's oil's fault, right? Oil, it's just laughable when you read some of the stuff out there. But anyway, from that point, so that was, you saw a lot of open interest change, and that's significant. So that's why we measured this. So then we do just very, very simple extensions. Because just think of the way I like to think about Fibonacci's. It happens in nature, as we know from Murray and Gann and Elliott. They've used it in their psychology. You see how it works. Basically, 30% of the population, so one third versus 2/3, 50. Most people are sheep, follow. Just think of it like that. So you got 100% of that move. We just came up with possibilities. So that spike last night was a spit of the 161.8%. So what that entails, if you want to think it in terms of its speculative zest or fear, and so that extrapolates. So when it's that far, you've gone through 100% of participants plus that, right? Just think of them logically, what it represents. And here's what's interesting. So your next Fibonacci, because it feeds on each other if you want to do the maths, is 150. That's uncanny, right? And this is just maths. We don't nothing magic here. So 261.8% will be 150.25. So that tells you that's possible. It also tells you, however, we're very extended here. So don't just assume this is going to go up, and don't just assume it's going to go down. Learn your waves. Watch it. Look at how these reacted, right? When this when the tank cracked through here, we never look back, right? It's all clean until right there. We got a kiss of life, and look what happened. Bang. That's a $22 move right there. These there's a predictability about this. You don't know the extent, but you know a power move's coming. It's very important to understand that. And that's why we go on about the certain things we watch and reacting to markets and then focusing our attention. These are very fast. You can't be dicking around in markets with real money, right? But when these opportunities, and you want these opportunities to happen to take advantage of them, they don't happen very often. So here's on the weekly. Look what we got to last night, plus 2.8. This was a great, we took what we took home off last night, for those that have been following us, and we put on a small short here. Once it started working, you know where you're wrong, right? And everything's in the market. And see, this is the old 161.8% from before, right? Remember what that was? So everything replicates. People are predictable in an unpredictable way. The unpredictability of human is pretty simple. People ask, how the hell in 2022 are two civilized countries going to war? Well, the answer's pretty simple. Humans don't change. They're very predictable, particularly men. They get the testosterone up, blah, 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 etc., right? So that all plays out into the markets. And if you understand the waves by now and do yourself a favour and try to work them out, that'll make sense, right? So very simply, this is a 3 or a 5, meaning this is a top, or this is just a third wave, which means we have more to come. Remember, the third's the most powerful wave, almost all the time. What else do we want to look at with oil? So we should look at England, or Brent. So Brent, 130, same pattern. That's healthy. That means the markets are moving in unison. See that? And let's have a look at the weekly on Natty. Again, see how it keeps spinning with the geopolitical factor, but we all know, right, that this is a domestic product. So it gives you this layup short. How many times have we done this? This is weekly, but we'll see on the daily. And look, so just remember that. And then under the contagion, you can add to it when it's confirmed. If you look at daily, you can see exactly what it did. What did it test last night? Remember, this isn't magic. This is all drawn before it happens. That's why we like this system. So this is in your weekly report. We banged that last night. Look at that, bang. And look what we did. We closed right here. See how all this comes together? So I left Snap up here because our buddy Madavi made, and he copped a lot of grief. That's the word I'm looking for some of the dribblers out there. He was adamant that this thing was a piece of, you know what, and it was going down, right? This is Snap, not Snap, Crackle and Pop, even though it did happen. But I think he started shorting here, and he said live on this podcast many a time, this isn't worth this. There's fundamental reasons. We did the technicals on it, and it put a little bit of pain here. Now look at that, and give credit where it's due, dribblers out there. Look at that. That was just a great trade. Look at that guy. Huh?
People are not going to give the market has changed towards stocks. They're not going to give the benefit of doubt to people who are not hitting it. You know what I'm saying?
Yeah. So, but here you had a good strategy, a good belief, and actually, VR's had the same thing. He put on that. I can't remember it, but what that social media ETF.
Yep.
What the hell's it called again?
XLC.
XLC, right? So, in other words, you have a strategy, you have reasons for it, and you have your fundamentals, your technical, your crowd sentiment, whatever, and you've got to recognize that. And make sure you make that decision and understand that decision yourself. Have all the help in the world you want, but understand why you're doing something. Otherwise, you're just going to panic out of stuff, right? Or not recognize when you're wrong, too. You're not always right. But that's a great trade. Huh? What was that?
The biggest one is jump around to something else. Then that one you were right on. It makes the move.
Right. And sometimes that'll happen. It's just law of the jungle, right? But That was just a great call. I wanted to share that and remind that one.
Well, yeah, I've been working on that thing for a little while, so.
Yeah, and you did your homework on everything as far as insider stuff, technicals, the product, the bloody social media, all that stuff.
So the reason it bounced Snap, their earnings wasn't as shitty as everybody thought it was going to be. Right?
Yeah. That's this bit. That's that bit where you added to it. But you were in it from up here too, don't forget. So that bit you copped grief in the dribbles.
The best part I liked about it was that they said, "Oh, we're going to be cash solid. We're making our own money now." All right, I'm like, great. So what's the first thing they did? They went and did a $1.4 billion in another raise.
Yeah, so that was a big heads up that it's not exactly hunky dory, or they're worried that it's going to go a lot lower, right?
They're just telling you, And as soon as the parents find out what's that app about, I think a lot of people are not going to be on there.
I like that, the parents, yeah. I was thinking of that in multiple ways. But, nice trade on that one. FX, I just wanted to share one. So we look at everything geopolitical and put it all together, and you want to get the habit where you actually understand it, know it, not waiting for it to become trendy. You know the stuff. And if you don't, you defer elsewhere, right? So if you're trading commodities, you got to know what the Aussie dollar's doing in the commodities there. You also got to know the other commodity stocks. Currencies, which is Canada. Canada's been fairly polluted as far as being a commodity stock because what went on there politically, and you had that trucking thing and all this sort of stuff. But as a general rule, this will tell you what commodities are doing. This is a country that has a massive trade surplus, the biggest iron ore, coal, natural gas, all these things, right? Let alone wheat, all these other things they're involved in. So it gives you a good heads up. Now, before I could have showed you Canada. Where did Canada go? But now they used to be very much an oil-dependent company. Oh, sorry, not dependent. What's the word I'm looking for? Self when you have it. Yeah. So they screwed it all up with their politics and policies. So you got to have a plan when you change things, be you're a trader, a country, whatever. So now what you can see is what's going on. But you can see. So remember, this is dollar up. Canadian. Sorry, it's $1.02, isn't it? So Canadian US dollar up, Canadian dollar down. So you can see here the change of things. So if you're aware of that, you can see what's going on underneath the surface, and you can look at Europe, for example. Look what happened. So a lot of so you're going about stocks. If you were following the euro, it wasn't too hard to work out. From here, there was problems in Europe with the energy crisis and all that. That's long before this acceleration is Ukraine. Everything that's Europe, right? I mean, we look at this thing. This is what happened with Turkey. This is real, right? So if you've got a good understanding of all that, you're going to be in. You might have a little bit of pain because stock market's always the last to work it out. But that's the sort of thing you want to look at, right? Okay, I guess we should look at crypto. So where's an hourly? Look at, so we actually got down to 37. Sorry, mate. What was that?
AMPP from Friday.
Oh, yeah. So we're going to look at those charts right now. I wanted to look at them on this other one because it's easy to see. Where did I put that shit? Excuse the French. Okay, so let's look at those guys on this. So, as I mentioned earlier, there was a lot of good low floaters went today, which we partook in. So, an important thing to have as a strategy is it's pretty clear, short stock, we have a bias towards short credit, so i.e. short bank stocks, short risk, right? Stock market, and then a bias towards energy. And so that's played out well. Internally in that, you've got other opportunities. So we know the Dribblers stock, that all fits in with that. We'll go through some of them. We added to some, took some off today. So I wanted to just show these stocks before we go through these charts. This is one that we use every week. This is the yield. You can see the false breakup. So this can actually go through all this, right? And the continuation. I wanted to share lumber because lumber is one of the few commodities that actually was red last week. So you can see the rising wedge. So that's a few things there that could mean it could just be a stall, but one to keep an eye on what goes on there. Volatility we talked about earlier. Look when it's breaking this big rounded bottom. Look at this on a weekly chart, guys. You see how that's coming up. So is this where you're seeing that hanging chat, I was going to say. But look at this if it breaks up here.
That's it right there.
So if we get through this, do you think there's a chance of this? There always could be, right? Total panic. So before we've had these, this time we're rounding up.
Is this the IAPL?
Huh?
What are you looking at? Sorry.
Oh, the VIX right here. Oh, hang on. What the heck is happening?
10-year treasury.
No. Now we're looking at the VIX. The VIX, sorry.
The interest rates are dropping.
Yeah, the interest rates are coming off.
Okay, you look at the VIX.
What's that? There's a feedback coming through. What's that?
Last March, or 2000 March.
Hang on, let me just adjust. There's a feedback coming through. Yeah, so I'm looking at VIX right now. That's that panic. That would have been COVID right there. What is that noise? Let me just mute that a little bit. There we go. So we had that. So here's COVID, whatever. See that panic there? We've had minor panics, but this is what I did find alarming. With all that's going on, this is all we can get to, you know? And the 10-year, we were just looking at. So that's this chart here. Now, the other one's the Baltic Index. Look how much that's fallen away. Now, this is the first time that I can recall that we have commodities totally inverse to freight. So that can be, there's a lot of incidents for that. Obviously, a lot to do with the actual demand, and it just shows you that it's a supply issue. But okay, let's look onto these stocks. You there, Madavi? Well, what happened there? Wrong.
Here.
Yeah, there was some weird feedback coming through. It seems to all be fixed.
Oh, I'm on mute, so it could have been me.
Well, no, it's good now. For earlier, I mean. So let's go through some of the, and so there was a selection of them. They were both shipping stocks and oil stocks, or energy. They weren't necessarily. So IMPP was one. But these are trading very, very, very this isn't it. Hang on, it's not IMPP. What is it again?
IMPP.
Yeah, that's it. I got that. I actually did that by error on Friday. So yeah, so we're going to go down to 15 minutes or something so we show what's going on. So we picked this up on Thursday. We talked about it on Friday, right? So it moved up. But look at these moves. They are clinical. And if you want to talk us through what you saw here, that would be good. Let me go to 5 minutes.
I got to learn you on this thing. Like 5 days ago, this guy, I looked at him. He was trading this. He bought he bought a good size. I mean, he bought probably a large position. I guess I don't know.
He did pretty good,
Yeah, around $1. He's been holding it, and then it was only at $1. It was only $1.80 at that time, and
and that's not long ago, people. That's like 4 days ago, right? Trading day.
I think we saw it. Was it on Thursday? I seen it moving up. On Friday, it really started breaking out. That's when we started trading it. So it went from like $2 to all the way to $5, right? So we started trading it there, and then that hit it on my radar. The first thing to do this morning, come here, and if that thing's strong, I'm gonna blast it.
Right. Yeah, so it's a keep things on your radar. And particularly, it's worth, so if you get a good, crew, I guess, or a group of traders that you respect and you know they actually trade and what they do, and they know what they're doing, and they have an edge, always look at what they're doing, try to work it out, and sometimes you'll get a situation like this deliver. And this delivered very well, And it had depth. It moved well. You could see what was going on. And I think what happens on down days like today, where, what was the Dow down? 800 or something? You get people trying to short them all the time, right? Whereas there's still that natural buying, because this is a shipping mob out of Greece, I want to say. But so there was a big bid in the, that's why I showed that BDI earlier. There was a big bid in shipping and in energy. And from memory, these are like involved in oil tanking and stuff like that. So there was a genuine bid there. But look at the volume, right? So Madavi looks at the volume. We look at how it affects it. And look at what it did on Murray Math. Like perfect, right? And then it just followed up these clouds. Did this stuff here. Then when it did that basically said this is a false break. And that's where he's gone hard, right? And we played this little bit here. Kept doing 30, 40 cent spreads with the algorithms taking over. So it was a nice one. There was a few smaller ones. What was the other ones we did? So IMPP. Well, one thing I want to do is share with you one of the bigger dribbler shorts I'd put on that we talked about last week. And really it only came to fruition today was DraftKings. So this is one that I've shorted on and off for quite a while.
The last one I did, BRN. Then it was the GB.
Yeah, that's it. Let me put that in.
GBR.
Let's get back to that.
Was, let me see. I'm trying to look through mine. Then you did OP.
Oh yeah. I forgot about it. We did a lot. So OP we hit because again. So the theme was energy and shipping.
Was Acer or Caser, whatever that was, Acre, whatever. I did 1,000 shares of that. You remember the one Acre or whatever? I
can't remember because I shut down my
Archon, ROCN.
Oh, that thing, yeah, RCON. Yeah, I hate that one. But that ended up working after we were done with it. Yeah, sometimes they don't work out. But so this one. So yeah, I did do a lot of them, didn't I? Because all I was doing was I just put on the spoos and basically sat with it. And added again. Both have been in that since unemployment on Friday. Anyway, so again, there's a group of guys we watch and girls that are very good at picking out themes. We said, okay, give us some more of the low floater energy. Some we were familiar with. Low floater, like shippers and all that. Some we didn't touch because we've been there before. We didn't like them. Some of them obviously did well if we did, but there's just certain things we don't like that set up. So this one I've been watching. It had been moving up over the last 3 or 4 days, and basically the little play I did in was just this one. It was just a little power play, right? So it was nice. So there's these two that are very quick. These certainly aren't investments. They're just pure trading. In a way going against the punter, I guess. But you can see how they work out very nicely technically. It's all maps, right? So look at the grid where they are. And there was a theme there. BRN was another one that you're talking about. We did. And remember, Barnwell Industries, that's it. So this was a nice one. This is the one... No, that was GBR. We'll go through GBR because that was a $5 rule on that. So this one again, motored. And you can see the pattern here, right? And there was a whole theme of these that moved up with that energy. The other big one, I know what you're talking about. HUSA. Yeah, that was the other one. So you can see this pattern here, right? So you're watching little things like volume and all that and the theme. And you can see when it breaks, they run. But remember, these are very fast and very dangerous. You only trade these if you have a good execution system, or you will get caught with them. The odds are, right? Here's the other one, Madabi, HUSA. So these are all, the only reason we're showing these is what to look for, and on a down day, these can happen. So this one was moving very similar to IMPP. We're actually out of it before this because we're a little bit more risk adverse, but you can see how they move. So the other thing is, what these all had in common, they had a small float. It was the theme of the day, and people that don't trade the indexes or have overall investment outlooks, they tend to trade to where volume is. There's a whole group of people do this, right? And it just happened to be an area that we know. So you'll know that. So that's a couple of short flavoured ones. Okay, as far as, let's look at our dribblers, an update on that. So Donkey Kong, as you know, it's one we took a big put position in last week, I think. And for some reason, this was holding up. So this is a company that we got all bearish here when they just started buying people, basically, and increasing their, that didn't make money. So they didn't make money to get market share. For those that are following, if you want the fundamentals of it, they increased their float. So we've been on and off short this for quite a while. As you know, it's just one of our dribbler dirty dozen. And so we added to this. When did I buy it? Yeah, around here. So eventually it started breaking down. I think someone downgraded it. But the point is, at the end of the day, we just took profit. Because VIX is so high, you have to recognize that can be impacting your optionality, the price you pay for it. And this is where it broke up from all this time, right? Now, a lot of things have changed. So that was a nice trade. We bought some of these puts for 10 or 11 cents, and we're selling them today. So we bought $18 puts was the trade, because that was, see the target we had? Expiring at the end of this week. We bought them, started last week. And we flogged these between 84 and 96, I think. I know 92. I think we might have traded some at 96. So they're good trades you can do. Now, they're not always going to work out. As I said, we had to roll off some that I didn't on Apple and thing. But you have it all part of a plan. Let's look at a couple of other. Here was a nice one of our perennial dribblers, I guess, Palantir. So this was so you notice what I said about the other one. They're affected by upgrades and downgrades, right? So Palantir today was upgraded by someone, which gave it this little pop, because a lot of these dribbler stocks, what's going on here? So like they've got these core that are caught long in them, and they keep averaging them or talking them up or whatever. So when something like a takeover comes, upgrade, that's the word I was looking for. Sorry, I got to get it, maybe 15 minutes. So that was one where from you can add to your short. So this gets upgraded. And so we took this little one. This is a day trade today. So you know the stock, you have your perennial, you know where you're wrong, right? See these triple tops? But what a good short that one was today too, Madabi, that Palantir, right? So, and what was the other one? Oh, what's our other ones? Path, upgrade that. And you can see what's going on here, right? Same patterns, just all the same people getting driven. Now, unfortunately, some I took off on Friday. I'm not sure. I just took this as a reallocating, and I should have stayed with it. Open Door was another one of ours. Look at that did. Just went down another 60 cents or so where we covered it. So there's a pattern in all these, as you all know. The other sector that we've been shorting has been the banking sector. So a good way to trade that is the FAZ or FAZ, the Direction Bear 3. Now this is an aggressive trade because it's a triple short. So you got to be right on it, right? So you can see what happens if you're not. So you're doing it as a day trade. And it's just a cheaper way of... I don't recommend this unless you're really experienced. But, because you're going to be tempted to hold it. Probably when you shouldn't. If I can get that up, would be good. And you know what? Let's change this to another symbol and work it backwards. So, if we look at JP Morgan, for example, and that's one of the main banks, obviously, and a barometer of what's going on. So we look at it on 3 minutes. So we did a short on this. I think we walked through a week ago, made a bit of money, but it's very, obviously, intense, very intensive for margin. So by doing the reason, and Madavi, actually this was his trade, brought this up, FAZ, is that you're using much less capital. And because it's 3 times, you're making up for that, if you're worried about not being overnight and all that. And you can see it trends when it trends. It tends to keep going. You see that? So that's another one we did today. And we're out of that before the end of the market. So that's the other kind of scenarios you can do in protecting your portfolio, because a lot of you aren't traders, you're actually investments, but you want to protect that. And for whatever reason, tax or long-term views, we can't, you want to protect that. Anything else, people, that we haven't touched on? You still there, guys?
Oh yeah, I'm still.
Yep. So I think we've pretty well covered anything that you think we could. I think, and so that was that was you. Remember FAZ last week? You pointed out, why are you doing JP Morgan, Bank of America? And I'm like,
FAZ and FAZ. So
and of course my answer. And you made a good point, and I just illustrate on that chart. When they go, they tend to keep going.
Oh, they go, man. They go. They
Right.
up and go. They got some pep in their step.
Yeah, there's some pep in that one. Yeah. They're chemically prepared, as they'd say back in the day. So, before we go, I just noticed Japan just dropped their current account balance. So let me see. It was minus 1.1 billion. I know that's in yen. So that's a yen one. The balance of payments were a negative 1.6. Now, trick question. What is Japan's one of their biggest imports?
Well, imported oil, isn't it?
Yeah, 100%. So that just shows you how big that drawdown was without even... That's just a headline number. How much oil... And that's January's. We're in March now. But already it was at $95, right? And this wasn't just because it didn't just happen. So it gives you an understanding of how impact on commodity importing countries this has, right? Negative effects on... And I want to say it was either Bank of Japan or the Japanese Prime Minister has already downgraded their growth outlook. So that brings you back to the Fed. So if the Fed raises interest rates, does it help inflation to start with, right? They've already said they can't affect supply, right? Or does it just kill everything?
It's gonna you'll have to do. You have to destroy the economy to bring down demand.
Right. So but the flip side of that from monetarism is that the high inflation is already bringing down demand, right?
No. But see, for him to keep it down, if you got high oil prices, you basically have to destroy the economy.
You're saying to stop people buying oil, right? That's what you're saying.
Yeah, because oil affects everything.
100%. Always has.
The food costs, everything has to be traveled. There's going to be gas involved. So if you got high gas prices, inflation, and you have inflation, that's a hard disease to knock over, especially with the Fed. It's only got a couple little bullets left.
Yeah, there's not many bullets. But the key to what you just said, and it just underscores how bad the energy policy has been with this whole ESG without transitioning, without a plan, and just going all populist, is... it just shows you how bad it is. And it's not just Biden, it's Johnson and all of right through Europe. I mean, well, they set it up to do this. I mean, you think about it. You lock down the whole bloody world. You threaten anyone with fossil fuels, etc. It's all well and good if you have a plan. But you got to have a plan. In other words, you got to get... Look, just say we're playing a game of football. Okay, any football. Soccer, rugby, gridiron, whatever. If I go out there without setting my defence first and just go on the attack, if I got no defence, what happens? And that's exactly what happened here. They all went out of attack, and they took their defence away. And here we are, $121 oil right now as we speak. $4.80 natural gas as we speak. Oh, good times. Wheat. We did a little trade on wheat again, some of those ETFs and some other food plays. The sad thing is we're able to take advantage of it because we're traders. So that's all well and good. But just think of those that can't. Because basically we're hedging our costs that we're going to pay when we go up to the store, right? So most people can't do that, right? So, and just put it in blunt terms. So tomorrow, what do we... let's see what we got tomorrow real quick. Well, I know we're all pretty tired. We've all been up late. And we got to get back to our life. Someone just said, hey, gents, inverse ESG has been awesome. It has for the energy bulls, for sure. I shouldn't laugh, but I love that. Inverse ESG. Anyway, hopefully in a serious note, they do fix up all this pollution mess and the climate change and all this stuff gets addressed correctly. Let's see if that happens. Big ask. Okay, tomorrow. I had a nice little list here somewhere. Give me a sec. I'm not liking this new... I can't get to the... let me put it back on. I'm having that same problem with that edge. Let me put this on... what do you call it? Firefox. I'm having that same problem. VR there. Remember I was saying before, it's really little glitches left, right and centre. I guess I will be updating. So, what do we got tomorrow? We have, we got the trade balance tomorrow. We just read the Japanese one. It's the same, you can imagine similar. Thankfully, America exports, right? So they're looking for 87 billion. Now, I believe that's going to be another record because last month I thought it was a record and it was 80.7. That's $87 billion in trade deficit for the United States. Right? That's a massive number. Well, good job. Good job, right? Anyway, we also have wholesale inventories out. But the other thing to watch tomorrow, we do have a 3-year Treasury note auction that will be watched. Now, keep in mind, there's a lot of misinformation about bond auctions. So you got to, and Madavi made a good point, it's what they, i.e. they that are running the market, so who's influencing tomorrow, if it's bond traders, whether high or low interest rates actually mean weak or strong bond market reflective to the equity market. Remember, it's a bit of to and fro there. So keep an eye on that. So today, as far as bonds, we went through, and we saw an increase in the yields across the curve there. Other than the 30-year, it was flat, and we looked at that 10-year. So keep an eye on that tomorrow. We'll put all that stuff, how we went. Obviously, it was down everywhere, Asia, Europe, and the United States as far as things went. So there we have it. Great trading day. I hope everyone did well, enjoyed it, following our nonsense. If you like it, make sure you smash the like key. Subscribe. Follow us all on Twitter. We try to get on when we can. We have Traders.com, Volatility Radar, and Madavi. Number 4, right?
Always be killing it.
And
Good night.
and always be killing it. Exactly. See you at the roundabout. And good luck. And say hello to my little friends. Bye now.